What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig, and we're going to be going over the charts as usual, starting out with the Dow Jones, moving on to the DXY. We're going to take a look at the DXY in the 4-hour daily and then weekly, and I'm going to show you something very interesting. Also going to take a look at a video from, I think it was last week. Yeah, sometime last week. We're going to take a look at that video, look at where we're at now, kind of see what's going on with Bitcoin. Is Bitcoin in serious trouble here? Will it get one more little pop-up before a continuation down? We're going to talk about that, kind of look at what's going on. I know there's a lot of stuff going on in the crypto and YouTube space right now. I won't mention much of it, but it's getting kind of crazy. Bear markets can be very emotional, guys. So anyways, let's get into it. Let's check it out, what's going on. So we talked about this yesterday in the Dow Jones. So we've been watching this 33,271. I said if yesterday's candle opened and closed below that, that was going to be pretty damn bearish. So as long as we're below this 33,271, that is bearish for Bitcoin, and I believe it's going to be bullish for the DXY. The DXY in the long run, I think, is going to be very bullish. If you guys have watched my channel, I've been bullish on the DXY for well over a year and a half. We've talked about it. Everybody else was saying it was going to go to nothing, and they were getting rid of the dollar. Well, we can see what's going on. Let's dig in and see what's happening. So as you guys know, I'm looking for, unless we can get back above this 33,271 area, I believe we are going to continue on down. What we may end up seeing here is just a little inverse head and shoulders. Maybe come back down to this range, come back up, retest that sometime towards the end of the week or next week, and then continuation down to around this 31,471, which would be the center of this channel. Possibly get a bounce there, come back up, and then continue on down. As you guys know, I'm pretty damn bearish on the DXY, or I'm on the dollar, not the DXY. All right, DXY. So on the 4-hour, I know everyone is talking about a double top. We thought it was a double top here. They thought it was a double top here. They think these are double tops here. Chances are, worst case scenario, we linger around in this area for a while before continuing up, but I do think we get up to at least the 112 area. And then if we go, this is the DXY, by the way, if I forgot to mention that. Looking at the daily, right? So on the daily, we were looking at this rising channel. The measured move of that rising channel is around 122. I hear a lot of people are starting to talk about that now. We've had this target here for quite a long time. Let's go into the weekly, though, and look at the big picture. So on the weekly, we had talked about this. I actually posted this on Twitter this morning. If you guys don't follow me on Twitter, definitely head over to Twitter, give me a follow. You can go down in the description below. There's a lot of my affiliate links down there, other links to my Twitter, Discord, things like that. Make sure you use that link because there's a lot of copycat scammers out there that make fake Twitters with my name. Also in the comments below, I'll never ask you to invest, never ask you to go to Telegram. I don't use Telegram, so be aware of all that scam stuff. So look at this as a falling wedge on the DXY. Now this is the weekly. This doesn't mean it shoots straight up, guys. Each little tiny candle is 1 week in here. So we have A, B, C, D, E, and a breakout of the triangle. If this is, or wedge, whichever you want to call it, if this is correct, that would get us up to somewhere around 178, which would break the all-time high. As you can see, this was back in the 80s when the same stuff was going on, all the inflation, everything was overpriced, and then it did come crashing back down. But this could take a year or two if it is to play out. This first area we're going to watch is this 122. It may play around in here for weeks or possibly months before breaking and then testing for support. If that does happen, I think we are going to have a huge run, much like you've seen over here in the 80s, which is bad for Bitcoin and traditional markets and gold and silver. The only thing that rises in a true traditional bear market is the DXY. Everything else falls. All the commodities, everything. You'll see a lot of commercials shilling gold, just like shilling altcoins. We'll use the term altcoins with all the stuff going on. But Same thing with gold and silver. When everything's about to crash, you see a bunch of commercials on how to hedge against the dollar, blah, blah, blah. They do that every single time. If they're so sure that the dollar and gold are going to continue to the upside, why would they be selling it? Why would they be pressuring you to buy it? Just think about that. So anyways, this is the Amazon chart in the .com bubble. This is a bubble pop pattern, which you can find in many, many assets everywhere. It is a pattern. I don't care if it is Amazon. I don't care if it is Pet Rock. I don't care what asset it is. We look at structure, and this is a bubble pop structure. We've been watching this. I made this chart on December 2nd. I also made a video talking about this, and it does seem to be playing out beautifully. If this does play out in the same fashion, we could see well under $5,000 for Bitcoin. The end of this year, if this does play out, then I think we may see a false bottom, which would be somewhere around that, $6,000 to $9,000 range. Get a little rally after that, maybe up to the 12 to 15,000. And then the true bottom in 2023, if this plays out. All right, let's take a look at the weekly. The monthly. The monthly resistance still lies at 24.5. So nothing's changed here unless we get above this 24.5, open and close a monthly above it. That's the bigger picture. We go into the weekly. As you know, on the weekly right now, the area we're watching for is 20,855, a break of this area. I believe our next stop for a weekly, not a 4-hour candle, not a 1-hour candle. It's going to take time. It could be choppy all the way down in the smaller time frames. But I do see us after the break, this 20,855 range. I do think we will be seeing around the 14.5 within a few weeks after the break. Now, if this holds, it is still possible that we get up to this 28,000, which would be the top of this rising wedge. That is still a possibility. So, like I have been saying, a great short position would be a break of 20,855. And I would at least like to see a 4-hour open and close below that to confirm the break. Okay, so that's what I'm looking for. Is it guaranteed? Absolutely not. Nothing is guaranteed in this market or in any market. I look at the markets as a game. I don't pay attention to news. I pay attention to the charts. So far, it has done me right. And that's why I don't get involved with all the news and all the, this coin's going to do this is going to do that, blah, blah, blah. I'm in it for the charts. So let's take a look at the daily. So in the daily, this is what I've showed for quite some time as a possibility. Possibly get back down to this 17.7 if we do get a bounce there. May look something like this. But all in all, the daily is still bearish, even if we get that push up to the 28,000 range, which is looking less and less likely. We have had this 24.3 support and resistance line. That was our target from way back here when we broke out of this falling wedge. And as we had said, once that is broken, that should be huge, huge resistance, which it has been thus far. If you guys are interested in trading, before we go on, I'm going to show you that video after this. If you guys are interested in trading, check out Prime XPT. That link is also down below. They don't trade against you like the other scammy exchanges. You don't see the big scam wicks. Definitely check them out if you haven't already. You can use my promo code SAVVY50. That'll get you up to a $7,000 bonus. Savvy25 will get you 25% off of your fees. Definitely check them out if you haven't already. You can trade all kinds of different commodities, gold, silver, oil, S&P, Dow Jones, everything all from one exchange. You can have multiple trades in, longs and shorts, so you can hedge your own trades. They don't clump them all together. Definitely check them out, guys, if you haven't. All right, so this video is from the 19th. What was that, Thursday or Friday or something? This is what I was talking about, right about where we're at now. Nope, I don't have the, shoot, I don't have the sound on here. But anyways, you'll be able to see in the drawing what I was talking about. See where I said we would get a bounce around that trend line and then probably bounce around within that. So this is what I was explaining then. And if we take a look at the chart, this is where we're at now. If we zoom in, just like I was saying, bounce around in that area for a little while. But once this actually breaks, it's probably going to head down pretty quickly. And as we've talked about before, now let me get the RSI off there so you guys can see this. As we've been talking about, when we get these lows like we got over here, right? That was it. That was the bottom. Everybody was screaming that was the bottom. It wouldn't go below that. And or at least get a bounce. We did not even get a bounce there. We came straight through. Next time we hit that 25.5 area. That was the bottom. Everybody swore it was the bottom. Never going to go below 20. And did not even get a bounce there. And right now this low is at the 17.6. Could we get a bounce there? Definitely a possibility. Do we have to? Not at all. We may see something just like that. Now this took... It looks fast. These are 4-hour candles. This took days and days and days. So we could definitely see the same thing if we break that 20, what the hell was it? 20,855. So if we do break that, we definitely, our next target's going to be around that 14.5 to 14.7 range. If that breaks, well, let's take a look at that in the hourly. So on the hourly, this may look a little confusing here, but pay attention and you'll get it. So if we look at this white trend line break right here, right, we're looking at this as a possible bear flag. Let me get the RSI off there so we can zoom in. So looking at the trend break from right here, if we look at that trend break and look at that as and this is how we get these targets and where we're going to be looking for bounces if we do break down from here. I'll also talk about what happens if we break up. Where do we go then? Right now, we are just within here. Nothing big is happening yet. But if we look at this as a flag pull, this being a bear flag from the break here, the trend break right here, we do that and we come down and break down here. We're looking at possibly that 17.3, 17.5. Which would line up with the old low. But remember, that doesn't have to hold, but that would be one of our targets. But now let's take a look at each drop, which target, which measured move, and where to look for bounces. So if we take the width of this channel and bring it down, depending on if, when, and where it breaks, of course, guys. The sooner it breaks, the lower it goes, right? So let's say it takes till later tonight or tomorrow. Your first target's gonna be around that 20,000 range, right? That would be the first place to look for a bounce. Next, you would take this from the blue, this trend line break right here, right? Looking at that as the flagpole. Bring it down. Where would that get us? Depending on how quick it was to break down. That would get us somewhere around 18.6 area, right? Now, if we go from this yellow trend line break right here, use that as our flagpole, come down, that would get us around 18,000. So these are the areas you're looking for a bounce. Your first one, that's if we break this level, is around 20,000. If that 20,000 breaks, your next level is going to be 18.6. If that breaks, your next level is going to be 18. If that breaks, your next level is that old low. If that breaks, we talked about that in the bigger picture. Bullish. Let's take a look at our bullish stuff here. So if we are to remain, you can see we're bouncing around the center of this channel right now. So let's take a look at, here's the 200 EMA. That would be major resistance right here, around 22,000. We break above that. If you guys remember, we had this old measured move of the head and shoulders right here, right? That got us down to that 22.1. So that would be my next point of resistance. So you may get a wick above this right here, fake everyone out, and then come back inside. But if the 22.1 breaks, then I'm looking for 22.9, and that just being... and that is just being the measured move of the break here. It'd actually be around 23,000, somewhere in that range. That's what I'm looking for, guys. Within here, there's really not a whole lot going on at all. If we do get up to these areas, definitely good idea to possibly look for some shorts. Of course, unless we look over at look at right here, this would be retesting the top of that around 28,000 if we were to get a huge pump up. Even if we did that, I would be looking for massive shorts in this range. So otherwise, right now, guys, just keep an eye on this bottom. If that does break, that would be a great short opportunity there. And again, if you want to look for bullish stuff, look for these areas here. Look for a break of this. But remember, we could get a wick to the 22.1 area and then come right back down inside. But if we get up here, maintain support, then start looking for around the 23,000 range. Anything above that 22.1. That's what I'm looking at. Hope you guys enjoyed the video. Make sure you smash those likes. Leave your comments down below. And I'll see you in the next one. Make sure you subscribe if you haven't already. I do these daily updates every single day. All you have to do is click your notification bell to get you notified when I post new videos. And I'm out. Take it easy, guys. Have a great day.